Ian, why don't you set the stage? Because those UK numbers that we got earlier this week, now the EU numbers, tell us that there's a pretty raging picture of inflation. I know energy is a big part of that, but how do you see this shaping up just around the globe? Is this still a global problem?
Well, it is a global problem, but it's much worse in Europe and in the UK because of the impact on gas flows from Russia, which has driven up energy prices much more than they have in the US. But there's broad-based core inflation as well in Europe and in the UK. It's not just an energy problem. It's not just a food price problem. But there's no question that those things are making it much worse. And they're likely to be a problem for a good bit longer yet. That's really the big difference between Europe and the US. Because in the US, I'm quite happy to argue now that inflation is coming down, both headline and core, and the next few months are likely to see it drop really pretty sharply. But I can't say the same for the UK and for the Eurozone. Some of this is already baked in because of the lag between rising wholesale gas, natural gas prices and retail energy prices. And some of it is more persistent pressure as well. So they're really dealing with what's likely to be a much more deep-seated and longer-lasting inflation problem than in the US. And, of course, that's a drag on growth because it's squeezing real incomes and it's putting pressure on the ECB. And the consequence of all of this pressure is that the euro has been very weak, and sterling has also been very weak against the dollar in the last few months.
Rick, what do you think about the inflation numbers we've been getting here in the United States? What's your expectation for what's to come?
You know, it's so difficult to try to keep up with all the minutiae, all the fundamental economic releases that go into inflation measuring. But I like to monitor the markets because, of course, inflation is playing a key role not only in the interest rate side, but the yield curves, the relationship between different maturities. And I think it's pretty obvious over the last couple of months by how interest rates have moved, how they've affected stocks, that we are past peak inflation. And I think the data does bear that out. And I think there's some logic here as well. Definitely energy policy or lack thereof of good energy policy domestically and globally has contributed more than its fair share of the inflation issues we're discussing. But there's also lots of leftovers from supply issues, COVID issues, war issues, and all of that, of course, is playing havoc. And I agree with Ian. And to dig down more deeply on the relationship in Europe between wholesale and retail, we know what's going to happen in the UK. That's why Bailey's already pre-announced a recession. They have caps that are going to start to come off. So we know they're not actually seeing the true nature of energy prices. And look at stories about coal. Coal is king. Coal is having a banner year, whether it's Germany or many of these countries. And to think that Putin isn't paying attention to all of these issues as Germany advertises cutting back 20% so they can stockpile enough to heat homes in the winter, believe me, he is going to do most likely what's the most painful. We need to prepare for the worst. And with regard to how this is affecting all the global trade issues, well, Ian knows as well as anybody, it's a relative value trade. Europe in recession, UK in recession isn't going to help the U.S., although the capital flows will favor the U.S.
So, Steve, that gets us to the Fed and how they interpret all of this, how they handle it, because, again, inflation numbers look a lot better here. But when you're looking around the globe and trying to figure out what happens next with things like energy commodity prices, it's a lot to assess. Should we feel like we're in the clear, or are they really on heightened alert here?
Definitely not in the clear. And I think one big issue it's really hard to game out is the effect come the winter on natural gas prices in the U.S. if Europe has a big shortfall. There's going to be a huge demand for whatever we can send over there, and obviously some limitations on the infrastructure of whatever LNG we can send. You can imagine that could pressure our natural gas prices, which could give us another wave of energy inflation that's worth gaming out. There's a couple of things here. On the Fed, one thing that's helpful to the U.S. compared to the U.K. is our Fed is ahead of both the Bank of England and the ECB by quite a bit. And this idea they may do 50 or 75 come September is going to put them further ahead. The BOE now pretty much signaling it's going to do a 50, but it has to do a lot more to catch up. That has, among other things, strengthened our currency. One of the things you look at, Becky, if you look at the openness of each economy, the UK is much more susceptible to what's happening globally than the US is. 55% of trade is equal to 55% of their GDP, just 23% in the U.S. We think of ourselves as an open economy, but a lot of the prices that are made or taken here in the United States are the ones made in the U.S. with obvious influence on international commodities, but we just have less influence. The UK is going to be rocked back and forth much more by what's happening internationally than the U.S. will be.